Hello everyone, this is Deborah Richardson, and today I am putting the AP in Happy where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. If you are looking for vendor process training for you or your entire vendor team, head over to my site at deborahrrichardson.com and click on the Vendor Team Training Solved button to learn more about what is included in the annual plan and also to download a training schedule. Get the training that you and your team needs to avoid payment fraud, duplicate vendors, compliance fines, and more. Does your company have ACH transactions? Of course they do. Now, if you or your team handles vendor invoices or vendor bank details, you want to hear this episode. My guest today is Amy Morris, Senior Director of ACH Network Rules at Nacha, and she is here to talk about an operating rule that requires security of your vendor's bank account number. What is that rule? Is your company required to comply? Who is Nacha? Keep listening. Welcome to episode 198. A data security requirement for the vendor bank account number? Yes. Learn more from Nacha's Amy Morris. All right. Well, today I have with me Amy Morris, and Amy is here from Nacha to talk about a specific operating rule that you need to know about. But before we get to that, Amy, you want to do a quick intro of yourself and talk a little bit about Nacha at a high level?
Sure. Thank you so much for having me here today. So my name is Amy Morris. I'm a senior director in the ACH Network Rules department at Nacha. And for those that don't know, Nacha is the governing body of the ACH network, which is, a very thriving payment system in the US that has ubiquity, the ability to reach all financial institutions. So what Nacha's role is in the network is as I said, we govern. We're also the administrator of the network. So we create and enforce the operating rules through open and transparent rulemaking that includes all types of participants. We also have an association side that takes on different efforts to support electronic payments, protect the reputation of electronic payments, and educate. One thing most people don't realize about Nacha is that we run the logical side of the network. We do not process any transactions. We do not see those transactions flowing through. We might get some reporting from the ACH operators, which are the Federal Reserve and the clearinghouse, but those are the folks that actually process the transactions, not Nacha. So personally, in my role, I'm on the network side in the rules department, as I said, and so I support the rulemaking process as well as assist in rule writing and tool writing and educational activities like these.
All right. Well, thank you very much. So looking at the operating rules today, we're specifically going to talk about the supplementing security data requirements rule. But before, again, we get a deep dive into that, can you just talk about the ACH network, just to talk about the difference between ACH versus EFT? Because I know we all use both terms interchangeably. So can you talk about the difference between those two terms?
Yes, absolutely. And I know it's so funny because back in the day when we were all getting together at conferences, that was pretty much the first thing that I would have to do when I was speaking to somebody, say, okay, hold on, let me clarify what it is that you're talking about. We're all throwing out these acronyms and what are we really saying? So EFT, some folks will say that EFT is an ACH and a corporate transfer is a wire. And somewhat that can be true, but EFT actually stands for electronic funds transfer. And so it's a broad umbrella of transfers that can happen electronically. Some people do associate it on the consumer side because electronic funds transfer is technically a defined term by the Electronic Funds Transfer Act, which is promulgated through Federal Regulation E. And that does limit that definition to a consumer transaction. However, we don't need to be quite so specific when we're talking about EFTs, but the main point here is that electronic funds transfer is an umbrella. It could be an ACH transaction, which can be both consumer or corporate. Could be an ATM transaction, could be a debit card transaction. So again, EFT is a very large term. ACH is one specific type of EFT. And again, an ACH transaction can be either a corporate or a consumer transaction. And then we've got wires, which really are a different animal. A wire also can be a consumer transaction or a corporate. And they are, even though they are electronic, they are not actually considered an electronic funds transfer. They are governed completely differently. They're a high value gross system. And so they're regulated by Regulation J instead of Regulation E. And so there are some specific differences in those different terminologies. And it doesn't necessarily need to be whether it's, consumer payment or a corporate payment. And then one last thing I wanted to mention, a lot of people know that there is such a thing as an IAT, an international ACH transaction. So lots of times people think that wire is the only way that you can get money out of the country, and that's not true. So when you do an IAT transaction to send funds or bring funds in, that is an ACH transaction.
So it sounds like Nacha governs both ACH and also IATs, but it does not govern wires. Is that correct?
That is correct. That is correct.
So when we talk about the Nacha operating rules, that is specifically for ACHs and IATs. Okay.
Yep.
All right. So Nacha governs over the ACH network and uses operating rules and guidelines to do so. In your opinion, who on the AP team or the corporate finance team needs to be familiar with these operating rules and guidelines? Those that generate payments, those that enter update banking and process those NOCs or notices of change. And then how do they obtain them once they determine that they do really need to know what they are, at least have access to them?
Yeah, honestly, I would say really all of those people have a need to at least know about the Nacha operating rules and have an understanding of why it is that they're doing what they're doing. We do say that, each office, at least at a minimum, needs to have one copy, and everybody in that office needs to know how to access it. And hopefully, you got some more copies going around. But I think that it's very important for really everybody that's handling payments or customer information that deals with payments to have, a basic understanding. You don't have to memorize the book, but it's really important for folks to have in your office to have an understanding of what the ACH rules are, where to find them, and have an understanding of also, that the guidelines are useful as well. There's very good information in there. So there's a lot of different ways that you can obtain a copy. One other thing I like to say about knowing or at least having access to the ACH rules is that not only is it going to tell you what you need to do, your responsibilities, but it also tells you your rights. So if something perhaps is not going exactly the way you think it should go, there's information in those rules that might tell you that you have recourse. You can do something about that. And so it's very important to be able to find that information. So there's multiple different ways. I have props. Some of us like paper. We do still have a book that we put out, but if you are not, still in the Stone Age like myself, we have two different electronic ways that you can access the rules. We've got a website, but we also have another digital option, which is sort of like a downloadable app and it's supported on many different types of devices. The rules come out annually. So you saw that this year my book is purple, but we change the color every year. The members get to vote on what the color is going to be, but that way you can tell at a glance whether you're looking at the current year or not. Again, if you're, if you got the paper copy there, you can purchase a copy of the rules directly from Nacha online. If you are a member of another association, like a payments association, you can also purchase through there. Your financial institution may also even provide you with a copy. Some of them will do that. They'll give one copy to each of their corporate customers. Sometimes you got to ask for it maybe, but a lot of them will do that. One interesting thing though about getting directly from Nacha is when you do purchase for the year, that does include any supplements. So if we do rulemaking and something comes out that didn't make it into the publication, then you'll automatically receive that supplement document. We also have ongoing subscriptions where you can purchase an ongoing subscription and you'll be automatically renewed and you'll receive the next year's version automatically. So lots of different options there to get your hands on the information.
Nice. And I think it's really eye-opening to understand that many different levels within accounts payable, or even if purchasing handles the vendor maintenance, right? Because they can handle the vendor banking. Let me be clear about that, entering and updating vendor banking details. And so they may be the ones that are handling those notices of change. And so with that, they need to have access to the operating rules, because I know there can be violations around the notices of change if that information is not updated and it keeps sending those error banking details in the payment file. So I think that's really key to understand, and also how to get them. I didn't know you could get those from your bank.
Yes, you usually can. And NOCs are a great example. They are one of the highest things we get complaints about, but also just any kind of exceptions and understanding the returns. And again, there might be a time where you get a return and you actually don't have to take that back. But if you didn't know the rules, you wouldn't know that. So lots of different, pieces of information for lots of different kinds of exceptions can be found in the rules.
Yeah. And again, eye-opening, because I shared with you about the fact that when I took over a payments team, I just kind of followed what they were already doing, right? Luckily, we had desktop procedures, so that's always good. But I just followed what they were already doing. I didn't even ask about the Nacha operating rules. So it's, again, eye-opening to let them know that, yes, it is something that they need, and maybe the bank can provide it. So now let's specifically talk about the supplementing security data requirements rule. That's what we're here for. And so I do want to ask, who is it for? What is it? What does it cover? And when did it go into effect?
Absolutely. So this rule, supplementing security data requirements, data security, it's called a lot of different things out there, but it's basically protecting information. So who does this rule apply to? It applies to non-financial institutions. So banks are carved out, but that's it. It applies to everybody else, whether you are a direct sender, whether you go through a vendor, it applies to the vendors as well. For large parties that are creating transactions. So we started this rule with a threshold of 6 million transactions annually or more. So the first folks that this applied to on June 30th of 2021 were folks that were sending 6 million or more payments annually. Now we're a year later and we've moved into our second phase, which is where we're at. We're at full implementation now. We don't have anything else coming down the pike currently. And now the threshold is 2 million transactions annually. One thing that I will mention about this rule is as I said, our implementation dates were June 30th, 2021 at the 6 million level, and now June 30th, 2022, which just passed for the 2 million. However, due to COVID, we have placed a stipulation on this rule that we will allow for 1 year period of time of delayed enforcement for parties that are working in good faith towards their implementation. So as we talk about the details of the rule, you still have time now to still be working towards getting in compliance if this rule applies to you. So in a nutshell, it starts out sounding very simple. The requirement is to render an account number that's been used in an ACH transaction, business or consumer, doesn't matter. Render it unreadable when it's stored electronically. This is very similar to a requirement in PCI DSS 3.4. It has basically the same language, just talking about a card number, saying that it must be rendered unreadable when it is stored electronically. So we've had rules in place for a number of years that have talked about protecting data in transit, that have talked about restricting access, talking about the only, the appropriate systems or parties should be able to view it, making sure it's not used for nefarious purposes. And now we're closing it all up now with this requirement. Again, it sounds very simple on the surface. Protect that account number, render it unreadable when it is stored, meaning not in use, when it's stored electronically, but it grows legs because we don't limit where you have to protect that account number. So that account number can get down into a lot of other kinds of systems, accounting systems, ERPs, other reporting to customers. It can even be on invoices. And so there's a lot of different places that you have to start to look and investigate and follow those legs or those tentacles to make sure that you understand all the different places where an account number could be stored in your system. Again, if you're one of those large parties that's covered by the rule.
Okay. So the accounts payable invoices is the one that kind of struck me because any random vendor decides, right, that they want to put their banking information on an invoice, then all of a sudden, right, now we have to make sure that that is secured. And so I say it that way because when I talk to my subscribers and listeners, you're not going to change a vendor's banking from an invoice. You're going to go through your process of updating vendor's banking information. So really, it's no need of it to be on the invoice anyway. But lots of vendors still do that. And so that's the part that kind of struck me, is that it is applicable to accounts payable invoices, where some vendors will add their banking information. So, all right. So 2 million ACH transactions, that threshold. So how does a company know, right? Because that's like your first test. Have I exceeded that limit? So how does a company know if they hit the 2 million ACH transaction level? And what's included in those transactions? Is that payroll? I know it's vendor payments, but what else can be or should be included in that 2 million ACH transaction threshold?
It includes any and everything. It includes debits and credits. So that can be both, your everyday business payments as well as your internal support payments like payroll and paying your own bills, paying the bills of your stores and things of that nature. It really does include, and as you said, vendor payments as well for, other types of business. It is anything that is originated by your company. And so in order to know that, and we go by the calendar year. And so there's a couple of ways to understand, how this can apply to you. First of all, it is at the top of, sort of the organizational pyramid, right? We consider an organization all the way up to the top, regardless of how many silos, business lines, holding companies, things like that. And regardless of how many financial institutions the work might be spread across, because lots of times large companies will spread their work across financial institutions, and that's great. That's a risk mitigant. There's no problem with that whatsoever, but not one financial institution in that instance might have the whole picture of your volume. So first, you need to understand, how that we're calculating that. And then you can use your own internal reporting and also your financial institution. If you only do use one financial institution, that's pretty easy. They're going to know about your volumes. And they may reach out to you already. If they know that they've already seen 2 million transactions, being sent through, your account or your combined accounts. But that would be the first thing to do, is to reach out to your financial institution, get all the reporting you feel comfortable with. If you want to, match it against your own, determine that everybody feels, volumes are the same. I'm sure, you can use even billing statements from your financial institution. Will have those counts on there for you. But then the financial institution may or may not want to update the ACH origination agreement with you to include something about this provision, saying, yes, you are covered under this rule. You need to comply with it. Not all of them will. Some of them just leave it under the blanket. You'll comply with all ACH rules. But that's the main step, is to work with your financial institution, because as I'll talk about a little bit more, they are the party, either your financial institution, or if you go through a vendor, what we call a third-party sender, you don't directly connect into the financial institution, then those are the parties that are going to actually be the ones enforcing it with you. Nacha does not do rule enforcement directly with organizations. We only work with the financial institutions. So talking to your financial institution and comparing your volumes is really important. That's how you're going to know. Going forward, so, we close out this year, and now, oh my goodness, 2022, we processed 2,000,001 transactions. So now we're covered. So if your growth naturally starts to exceed the threshold for, as I said, we go by the calendar year, then you would need to become compliant by June 30th of the following year. So if my 2022 volume hits the 2 million or more mark by June 30th of 23, I would need to be compliant. If your volume, though, this is a key point, if your volume exceeds 2 million as a result of a merger or an acquisition, that needs to be part of your merger or acquisition plan, that new entity will need to be compliant. So the new entity comes about, July 15th. They don't have until June 30th of the next year to get compliant. They would need to be compliant as close as possible to June 15th. So it's an important thing to think about in those steps.
Yeah, and coming from my previous professional life, we had tons of acquisitions, and I always kind of handled the, combination or the addition to the vendor master file. But you're right on that point, because if you're below the 2 million ACH transactions as a single company, when you merge or acquire a company, that could push you over that threshold, and now you are covered. So it's smart to include that as part of the merger or acquisition plan. All right, so 2 million ACH transactions. And so if the banks haven't, or the financial institutions haven't reached out to them, they really need to reach out to those financial institutions to determine what their level of activity is at each one, and then see if they qualify. And you also mentioned about third-party payment providers. And I know there's been a lot of activity of, moving towards pushing all your payments to someone else as a result of COVID, right? And so did you say in that case, then that third party payment provider would work with you, or they would be responsible for making sure that that information is unreadable when stored electronically?
Right. So if you use a vendor or a third-party sender or processor, whatever terminology, they are also a party that is going to need to comply with this rule as well. Okay. So they have responsibilities, but their responsibility is within their own four walls. The company or organization, as sitting in the role of what we call the originator, the creator, the sender of the payment, the entity who's doing the business, they still have to comply with this rule as well. So if you use a vendor, they need to comply, and you still need to comply as well. The only way you can use a vendor to outsource your compliance is if your vendor is the only one who is storing that data and you are not storing it at all. And so sometimes, as you said, there has been a lot of movement to third-party senders. They've been very prevalent in the market for a long time. But the difference there is that ACH origination agreement doesn't exist between the business and the financial institution. The third party sender or the vendor has the ACH origination agreement with the financial institution, and then the company has an ACH origination agreement with the vendor. And so when it comes to compliance, everybody has to comply. When it comes to enforcement, not just going to knock on the door of the financial institution is going to knock on the door of their customer. And if it's a vendor, they're going to come and knock on your door for proof of compliance.
Got it. And so that covers third-party senders, and it also covers, right, because AP automation, e-invoicing, getting invoices out of U.S. mail, right, because that was another issue with COVID. So a lot of people brought in AP automation for the invoices, and so now they also have to comply if those invoices contain vendor banking. So AP automation, either third-party senders for your payments or e-invoicing, or really anywhere, any document that can contain vendor banking with any of your third-party providers, those are also covered.
That's correct.
Wow. Okay. Lots to think about. And I know AP automation has been big over the past 24 months. And so now you really need to look at all of the providers that can house that information on different documents. Oh, maybe even contracts too. We could be here forever on that one. All right. So, well, with that in mind, for the accounts payable manager, like what I was, right, or the team members that are listening to this, right? The supplementing security data requirements rule does cover the vendor bank account when it is included on invoices and when it is on the vendor record and the deadline has passed. So if they are just hearing about that right now, as they listen to this episode, should they panic? And I will say I called it a deadline, but it's just when that threshold, 2 million threshold went into effect. But if they're just hearing about it now, should they panic?
I don't think anybody should panic. I think this is something that everybody needs to take seriously and needs to obviously get on their plan of work immediately. As I said, during this 1 year non-enforcement period, that's for folks that are working in good faith to implement. But I do not think that folks should panic. The first thing that they need to do is figure out, okay, does this rule even apply to me? Do I meet this threshold? If I'm a very small business, then this rule is not even applying to me. Now, it's a best practice that we always need to protect data. I mean, we need to start thinking about a bank account just like we've been thinking about a credit card account. When is the last time you saw a credit card account lying around on the desk somewhere? We just can't do that any longer. First step to think about is, does this rule apply to me? And then, okay, if it doesn't, all right, but still think about, what's the long-term plan here? And then the next step is if, okay, I am, covered by this rule, we do meet this threshold, then talk to your IT team. I have spent the last several years, meeting individually and as groups with different organizations and kind of walking through this. And I will tell you, so far, every organization that I've spoken to that was concerned about the invoice situation, when they talked to their IT team, the IT team said, oh, that application in that database is already encrypted. So there was really not even work for them to do. Typically, I mean, you need to verify, you need to make sure it needs to be. But a lot of times, I mean, we already understand this is sensitive information that's happening. We don't want anybody breaking into our AP systems, right? And getting at that information. So a lot of times this is already going to be in place. But then again, just, going forward, if you're not compliant, you still have, almost a year to get there. And no matter what, data security is just all of our goals. And we should just always be doing the best that we can. And that's what we're asking for.
Let's say they're not compliant and they need to get compliant. So based on the information on nacha.org on this operating rule, and I will have a link to that page in the show notes, there is a frequently asked question on disk encryption. Without getting too technical, is disk encryption acceptable? Does Nacha dictate how companies should render the vendor's bank account unreadable when stored electronically?
Great, great. So Nacha, the rule does not dictate the technology that one employs to meet this rule, to render the account number unreadable. So there's a lot of different things that could be acceptable, from different types of encryption to truncation to redaction to tokenization. I even mentioned earlier, there are some vendors out there who will host your data for you and provide you just with a value, a token that you would pass back and forth when you need to access it. And so you're not holding it at all. So Nacha does not specify. We use our favorite term, which is a commercially reasonable standard. And so one of the reasons that we do reference PCI DSS is because it's a commercially reasonable standard for protecting payment information out in the industry. We did not want to have to reinvent the wheel. And if you are a large party who is subject to this rule, chances are you might already be doing PCI DSS audits. It's not to say ACH information comes into PCI. It doesn't. It stays separate. But these are different kinds of technologies that are described in some of these PCI DSS documents that you could employ. And so that 3.4, as I mentioned, and it goes down into 3.4.1, does speak about disk encryption, which is one level, it's one type of encryption that is acceptable to meet this rule. And Nacha says, basically, again, adopting that commercially reasonable standard, the same information that's found in the PCI notes, which is if you're using disk encryption, it's acceptable as long as you are maintaining certain other pieces of security and separation. So that is things like making sure there are no keys that are stored on that disk, making sure that passwords for accessing that server and those applications are not, that they are unique. They're not like the same password for the network and things of that nature. So there's a few extra steps that you have to take. But yes, disk encryption does meet the requirement. And one other thing I just want to mention is we get a lot of questions also about what does it mean when it's stored electronically? And we are really talking about when the data is at rest. And so when properly authorized, need to know customer service agent or an AP, an operations person is looking at that account number while they're logged in and they're in that session, they are allowed to see that account number in the full. Same thing if a system is running, it's building a file, it has the rights, it needs the access. But once that file is built, once that person closes out, that session that they were working on, now it goes back to an at-rest state and it must be unreadable again.
Got it. At rest. So while they're using it, those that are properly authorized,
right,
can have access to the full account. But when it's at rest, then it must be unreadable. Okay. Got it. All right. And then Nacha, right, doesn't dictate what the method is to render them unreadable. But again, that's another conversation with the listener's IT or systems team. So speaking of operating rules, I think we got great information on this supplementing security data requirements rule, but you've got another one that's coming out soon. And so this one is the micro entries rule. And the good news is that the due date, or the first one, is not until September. But for those of you that are wondering if that means your penny test, it absolutely does, right?
Absolutely. So we do have another rule. It is another two-phaser. And as you said, the first phase is September 16th of this year, 22. It pertains to what we are now defining in the Nacha operating rules as micro entries. And so, yes, test deposit, penny test, penny transaction. We've called them a million names over the last 20 years or so. And Nacha is not intending to really reshape an existing market or product here, but basically just to provide definition and standardization around an optional process, so that if you are doing micro entries, as we now call them, everybody is doing them the same way, which allows for better fraud mitigation both on the sending and receiving side. So in our first phase in September of this year, we're focused pretty much on that standardization of the format. So these are things that, we've got sort of a short lead time here, but these are things that typically are parameters within a payment system and are easily changed if they even need to be. And so again, the first thing is this only applies if you're doing micro entries, but we have defined the micro entry now as a type of entry that's used for the purpose of verifying an account or an individual's access to the account. So not everything under $1 is a micro entry. It might be a dividend or a rebate or something like that. So it doesn't just mean it's under $1. It's defined for a specific purpose. And if you are performing these types of transactions, there's a specific description that'll need to go in. It needs to be in by September 16th of this year, but you could change that description at any point between now and then. And it is account verify. Again, when you look at the resources online, you'll be able to see the actual language there. We're also reinforcing the company name rule, which exists on every transaction, which is the company name needs to be the company that the receiver recognizes as doing business with. And so the company name needs to be the same or as close as possible on that micro entry as to the future transactions that are coming. We're not dictating that you use both credits and debits in your micro entry process, but if you are using debits in your micro entry process, that is only going to be for the purposes of offsetting any credits that you will have sent. So again, effective September 16th, two things. If you're using debits and credits, they've got to be submitted at the exact same time for the same effective date. And the debits cannot be more than the credits. So you don't have to have a one-for-one relationship. You can send 2 credits and 1 debit, 3 credits and 2 debits. They don't have to be for the same amount. They just have to either add up to the same or be on the plus side. No net negative to the account. Can't end up debiting that receiving account. And then once the receiver has completed whatever verification process the company has in place, they're able to send future transactions. So it's not like a pre-note, if you're familiar with those, where you got to wait 3 days and no news is good news, and then 3 days you can send it. You could actually have this done all in the same day. If you sent the micro entry in the morning and the customer was able to verify it midday, you could send the ACH transaction out that night. So there's nothing, built into the rules there. It just says that your process has to be complete. Our second phase comes in March 17th of next year, and that is to require commercially reasonable fraud monitoring for those parties that are doing micro entries. Now, this is not account validation. You don't have to validate the validation of the number, but this is really more about understanding your volumes, both forward and return, and being able to recognize red flags. If I'm expecting 10,000 transactions and I've got 10 million, that should set off red flags and procedures of folks to start addressing that issue. Same thing if all of a sudden I'm getting a high volume of returns on micro entries, should set off red flags, and we need to investigate, is somebody trying to do something in our system here. So again, those dates are March 16th of this year. I'm sorry, September 16th of this year, 2022, and March 17th of 2023.
All right. And I'm glad you clarified that. And I'm glad that, right, for those listeners that are listening to this prior to September 16th, you do have some time, right, where you can go back. And it sounds like you may need to maybe work with your IT team to update the description in the pay file, depending on where it's pulling from. But if you are an AP team or a payments team and you are using the penny test or micro entry to verify that that is your vendor's actual bank account to offset that fraud risk, then micro entries, this new rule does apply to you. And I will put a link to the Nacha page for this rule in the show notes as well, so that the listeners, you guys can go out and click on it and learn more about it if you are using the penny test or micro entries. All right, so a lot of information. So just to summarize, what should listeners do as next steps to see if their company is required to comply with either rule? And if so, how do they confirm if they are already compliant or not? Really just trying to give a solid roadmap for where to go when this podcast episode is over, what the next step should be.
Absolutely. And actually, it's funny you mentioned that. And Deborah, this is another link I can send you if you want to include. We have a corporate resource center also online, and we put out one pagers. If you print them, it's one page front and back. If you look at it online, it's 2 pages. But the last page of those documents is always a checklist of what should you be doing now and through time up until the implementation date. So we've got one for both of these rules out there. So again, I can send you that. But for the data security, it's determining your eligibility by knowing your volume. And if you've got to do something, then that's your first step. And then you would need to talk to your financial institution to see what they expect of you. And then your IT team to determine, where are you? Are we already performing these functions? Is this already covered? Are we good? Or do we need to, we need to investigate, look at all of the systems in play, and then start having those conversations with your IT team as the methodologies and the systems and the types of things that your team implements. And then for the micro entries, again, determining, does this even apply to you? Do we send these test transactions? If we do, then okay, the next thing is, okay, we need to talk to ACH operations or IT and say, okay, how is our file formatted? Or our vendor, how is the file formatted? And then, as I said, and Deborah said, then you can start, making a checklist of the different fields that would need to be changed, and whether that's the timing on the submissions of the debits and credits, the description, those types of things, which again, usually are parameter driven and hopefully not too massive. But the first step for both of these is eligibility. And then the next step is talking to IT and talking to either your vendor or your financial institution.
Got it. And I like that you're going to send a link for me to include so they can get the downloads. I have a checklist. Love that, because that always helps. I also really like the fact that you have a rules news that everyone can sign up for. And so I'll put a link to that page as well. And that way everyone can keep up to date on the Nacha operating rules as updates are sent out. I think that's really great.
Yeah, absolutely. That is just to let you know, that's different from a Nacha mailing list. Anybody can sign up for that, and it is content created by the actual rules team, specifically all around everything you need to know about the rules, like you said. And so, yeah, we encourage anybody and everybody to sign up for it. We do them as needed once or twice a month.
Speaking of that, as we record today, I received an email, and it's something about the 11:30 deadline. So that's more upcoming. So yet another reason why, right? You need to make sure that you keep up with the Nacha rules. You obtain a copy. You sign up to get updates on rules, because I think this one, and I'll put a link to that as well in the show notes. I think that one's going to make everyone happy. I don't think it's anything for us to do, but it just gives more options. So that's going to be a great one. I'll include that as well. Well, Amy, this has been so informative. Thank you very much for coming on and talking Nacha operating rules, because I think we just don't do enough of that in the AP or the vendor management space.
It's my pleasure. Thank you all for joining. And Deborah, thank you so much for having me.
So thanks, everyone. I hope you enjoyed the 198th episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. If you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.